Welcome back. Before we get to our technical experts, let's get back to Sid Khemka. Sid, I believe now we can hear you, so that's good. Your view on Coal India post this 300 rupees per ton increase for NCL, which is 18% of their total volumes?
Yeah, hi. So sorry for that bad audio. I think definitely that's a positive news flow for Coal India at this point in time. A bulk of the capex is done, and we believe that a lot of this would flow through EBITDA and to the net profit. So what we are expecting is about 5 to 8% improvement in profitability next year because of this additional 300 rupees per ton that they are going to charge. Valuation-wise looks very attractive with a high dividend yield. Even Q3, we saw strong volume growth of 15% on a sequential basis. Net profit increased 35% sequentially. So overall, we believe that Coal India is likely to sustain a strong volume growth in the near term, as well as improvement in realization that should drive growth. So overall, we remain positive on Coal India. We have a buy rating and a target price of 480.
Nirmal Bang today has a strong buy on Polycab. They've upgraded the stock to a buy. Their target price stands at 6,228. And they're saying that it won't impact Polycab. It will have a bigger, this Ultratech's move to enter into cables and wires will have a bigger impact on housing-focused and B2C players like Finolex Cables and Havells. So Polycab is a strong buy. So Siddharth, yesterday after the carnage that we've seen in this entire sector, what is the advice? If someone has stocks, should they continue to hold on to it? Should they go out there and top up their investment? Or are there stocks that you would advise unwinding and unloading right now?
Definitely, I think the announcement by Ultratech to enter into the cables and wire segment is a disruptive move, especially for some of the incumbents with the large capex of almost 1,800 crores that Ultratech has announced. We have seen the disruption Ultratech could manage to do in a much more closed, or you can say a duopoly kind of environment in the paints industry. So I think definitely there is a pain, but on the positive side, I think there is still some time away for the capacity to come in and for Ultratech to enter the market to do any kind of impact on the financials. Nonetheless, I think this announcement definitely leads to a kind of a de-rating environment in the cables and wire segment, which have so far been able to command a premium valuation. Even we have cut the valuation multiples by about 20% for Polycab, KEI, RR Cable, and for Havells by about 10% given its diversified presence. We have also downgraded our rating on KEI and RR Cable to neutral from buy. We believe the stock could remain under pressure or could languish until some time where the valuation, the new normal of the valuation is achieved. But we are continuing to maintain a positive view on Polycab, where we have a buy rating. We believe that is the market leader could continue to grow at a much faster pace. We have a target price of 6,950. If you look at even the quarterly numbers have been pretty strong. We believe that the earnings growth could be pretty impressive going forward, about 13-14%. And given the market leadership, the impact of Polycab could be on a smaller players, much larger compared to Polycab, which continues to command more than 20% share in the cables and wire business.
Sid, morning, Prashant here. So I have two questions actually. Let me just start with the SEBI-related one. Any reason why any of the AMCs, capital market plays, etc., should react with the new appointment at SEBI?
I think there should be policy continuity in terms of SEBI, as we heard Bala talking about how a lot of positive developments have happened in the last few years under the outgoing chairman. A lot of further developments needs to be done. I think the overall capital market continues to remain strong, and with the minor blip that we are seeing because of the market pressure, volumes going down, there are questions about the continuity in the growth of SIPs. I think the near-term blip stocks have come down. we definitely like the capital market theme as a long-term positive structural story. Something like a CAM, CDSL, we have seen a good correction and believe it's a good buy at current levels.
Fair enough, CAM, CDSLs, etc. The other one is banks, right? So yesterday the top gainers were Shriram Finance, Bajaj Finance, Bajaj Finserv, Chola, Credit Access. The MFI was up 10%, was up 18% at one point intraday. And the index itself was up 0.5, 0.6%. Changes at the RBI in terms of loosening things and easier rules generally seems to be, and this is a departure from earlier, and that's what the market is reacting to. Any thoughts here? Anything you like here, Sid?
Definitely, I think if you look at the past few developments from the RBI side, they have been largely moving back to an environment where they're giving more freedom, or we can say, to grow. Not only the CRR cut or the OMO operations, this reduction in risk weightage definitely leaves more liquidity for some of the banks to lend. The cost of capital for MFIs, for NBFCs will come down because of the reduction in risk weightage. What we like Shriram Finance, which is in the large cap space. We see strong growth, recovery in the CV side, tractors also doing well. So that is one of the preferred ideas that we like from the entire NBFC space. Microfinance, I think there is still some time away. The Q4 numbers would again remain subdued under pressure, we'll maintain an underweight view on microfinance. But within the larger financials, we like Shriram Finance. Chola is looking good. LTFH, L&T Finance is also now, with this improvement in liquidity, cost of capital coming down. I think that should also start doing well.
Okay. Thank you very much for joining us, Sid. Appreciate it very much, your time here.